All right. All right. Hello, everybody, and greetings from sunny Chapel Hill. It's Mark Yusko from Chapel Hill, and we are going to jump into Around the World today. Got a bunch of slides on this topic from silicon to GDP, how AI is rewiring the global economy. So you can see up on the left the voracious appetite of the AI god here, getting fed $80 billion to cash. And then on the right hand side, you got Zuck saying cloud for sale, and Jensen happily selling him a bunch of chips. So we'll dive into all of that here in a second. AI will be the most transformative technology of the 21st century. It will affect every industry and aspect of our lives. So says Jensen. As artificial intelligence evolves, we must remember that its power lies not in replacing human intelligence, but in augmenting it, from the former CEO of IBM. The playing field is poised to become a lot more competitive, and businesses that don't deploy AI and data to help them innovate in everything they do will be at a disadvantage. From the CTO at Accenture, AI will change the way we work, run our business in the same way that the introduction of the internet did. In particular, AI decision making has the potential to raise economic output, and it's projected to add a staggering 13 trillion with a T to the global economy by 2030. There's a little bit of figures, liars figure here, which I'll get to. And that's from a base of 122 trillion currently. All right. So the math isn't really mathin' on the IMF AI, because what the guy from Peak did is he basically took this chart on the right, which is the IMF saying that AI is going to add, okay, now it's 15 trillion. Well, yeah, but supposedly we've already added almost 10 trillion. So really that's only an incremental five. But then when you look at their own numbers, they say, well, it's 0.5% per year. Well, if you start with the $122 trillion base, that only gets you 3.6 trillion. So there's a whole bunch of math that isn't really mathin'. And it's interesting too, at the same time as they're saying that AI is going to be so great for GDP, that they're lowering their own estimates of global growth. So go figure. Now, Goldman Sachs said a little earlier this year that look, AI hadn't really made that much impact on the left-hand side through the fourth quarter of 25. And we're basically trying to underplay this idea that, GDP was dependent on AI. Well, Bloomberg said, well, not so fast, my friend. It's really closing in on 25% of nominal GDP. So one out of the 4%. And the AI spending had reached a really absurd level of 8% of GDP. So actually, in Q4, it turned out AI CapEx was more than 100% of US GDP, in air quotes, growth. So did we actually have any growth at all? We had 0.5% was the final estimate, and we had about 0.7% come from AI. I'm sorry, 0.8% come from AI CapEx. Now, the first estimate for first quarter 26 on the right-hand side is 2.1. My guess is that will get revised down, maybe even dramatically, but we'll see. So for all of 2025, AI CapEx was 50% of GDP growth. Now, the Hope trade says, well, it's going to fall to 33% by this year. So that's the right-hand side, basically from Bridgewater, saying that, estimates are that we're going to have 2.8% growth this year. I'm going to take the under on that, probably way under. And 2% of it is going to be X AI spending. So, AI will be about, a third of it. down from 50% last year. Now, generally speaking, humans, now that we have spreadsheets, we do something really kind of funny. We basically um, extrapolate everything up and to the right. So if you look in 2025, AI capex was, somewhere in the, 400 billion range. And then in 2026, it's estimated to jump up to 750, 800 billion. Well, if it's growing that fast, then it's just clearly going to go to, 1.2 trillion and then 1.4 trillion. Well, okay. I mean, it could do that. And I guess that's as valid a method for estimating the future as any other. But I'm going to show some data that says, well, not quite sure how that's going to happen. But generally, if we put this in perspective, this build out is now rivaling the greatest build out in history, which was the railroads back in the late 1800s, where we spent 6% of GDP. Now we're forecast to spend, now they are throwing everything, including the kitchen sink in here. And so anyone who buys anything having to do with memory or servers or software is now getting classified as AI. I don't actually think that's accurate, but people are look, AI is the hot thing. And if you put AI anywhere, you'll get more clicks. So everyone's got to talk about AI. Morgan Stanley says building data centers is an infinite money glitch. So they basically say that, you've got a 70+% margin. So you build this data center and then you rent out the GPUs. Now, they're saying you get 40% ROICs, return on invested capital. Well, what do they mean by that? Well, they mean that, you're getting this return on the capital deployed, but part of that's dependent on things like the rate at which you depreciate the assets. And so on the right-hand side, actually this morning, the CEO of Microsoft tweeted, he's now on Twitter in the past couple of weeks, that he entered his hyperscaler build out data into his Copilot, and it generated this nice graphic saying that the average ROIC was 29.7%. So everybody's talking about ROIC. Well, the reason is he quietly slipped in to the conference call that they extended the useful life of these data centers from 15 years to 25. Now, if we think about that for a second, it's pretty illogical on lots of different levels. So one is, do we really think the chips are going to last that long and not have to be completely updated and replaced? The replacement cycle has been measured in single digit years, not decades. Second is, we probably would have made the same estimate about CPU data centers when those were being built out 20 years ago, and they didn't last 25 years. So I think there's a little bit of, if you torture the data long enough, it will confess that's going on here. And look, maybe these things are an infinite money glitch. Maybe you can spend $1 billion and make 70% IRRs for every $1 billion you put in. And so these guys are going to spend a lot of billions. Well, maybe. So the hyperscalers were, past tense, cash cows, meaning they made a lot of money, like real money, had revenues come in, not that many expenses. They'd cut a lot of people. They decided to drain the coffers for this growth. So on the right-hand side, you can see the quarterly free cash flow has now disappeared and turned negative. And the problem with that is if you don't have any cash, well, what do? Well, you borrow money. So Google reported negative free cash flow for the first time ever. Market didn't really like that. Stock went down. Meta gets lots of money from ad revenues, but they burned it all in CapEx. So dropped not quite negative, but down to the lowest level. Market really didn't like that, down 10% today. Now Microsoft shifted the focus. They said, well, yeah, current free cash flow is down, but starting in 2029 and 2030, it's going to go way back up. No one could say yes or no. So big short squeeze up 15%. Now, what's crazy is these are multi-trillion dollar companies trading like penny stocks. Microsoft's still down for the year, but up a lot today. Now, the real issue for all of this is when the hyperscalers on the far left side, when they ran out of money in the fourth quarter, they had to rely on the kindness of strangers. And in the middle, you can see that, okay, if they need $1.2 trillion by 2028, and the problem is they issued 194 billion of debt so far this year, and it's the fastest rate of growth in debt outstanding on the right-hand side ever, right? Faster than the telcos that ended in tears, faster than the real estate bubble, which ended in tears, faster than the energy shale build out, which ended in tears. So at some point, people stop lending you money if they think you're going to light it on fire. So all the free cash flow is gone on the left-hand side by the end of this year. And yet you have these monster commitments outstanding, measured in hundreds of billions of dollars. So what do? Well, you borrow. But if people won't actually lend you money on balance sheet, you create off balance sheet financing. So there's a hidden amount of debt numbering about 1.6 trillion. And it takes the form of off balance sheet leases and a number of other creative financial schemes. And on the right hand side, you can see that the cost of insuring against a hyperscaler default is now rising. And these are credit default swaps. And the AI players have, there's my first typo, it should be a capital I in the AI, woven a web of circular financing deals and guarantees. So you hear a lot about this, NVIDIA will backstop OpenAI, or, NVIDIA will backstop, Amazon or Microsoft or some, and the reason they're doing that is they want them to buy their chips. So they'll backstop Oracle if Oracle promises to buy their chips to put in their data centers. And so there's this same kind of $1 trillion that's circling around between and amongst all these different companies. Now, the market might be saying that Jensen's writing checks his body might not be able to cash. And on the left-hand side, you can see their credit default swap has surged, right? It basically, no one thought they could ever default on their bonds. But now they're pricing. Now, they're not saying they're going to default for sure. It's only 6.5% probability. But the rate of increase is rather dramatic. And the stock has pretty much been dead money for a year and has fallen, not severely, but meaningfully from its peak. Oracle, on the other hand, is pricing significant and real. That's the gray line on the left. The red line is SpaceX. We'll get that one later. So SpaceX is pricing in meaningful defaults. The crazy thing about SpaceX is their bonds today trade at about 86 cents on the dollar. Now, if the bonds aren't worth par, then the equity is worthless, but we won't go there. So Oracle credit default swap is at an 18-year high. It costs you 200 grand to insure 10 million of Oracle debt, which basically means you have to pay $1 million or 10% over 5 years. That's global financial crisis-esque. This one might be a zero. Now, Oracle is tempting fate. Left-hand side, their free cash flow has turned negative. They're losing tens, plural, of billions of dollars of cash flow. And yet they are relying on the kindness of strangers by issuing tens of billions of dollars of debt. And on the right-hand side, you can see that the jump up, that gap up, was the announcement that I can't remember. I think it was OpenAI. OpenAI was going to backstop Oracle, but they really don't have any cash. So then NVIDIA had to come in and backstop OpenAI. That's this whole circle thing. But Oracle stock jumped to new all-time highs and is now down 67% since that high in 2025. So as your money runs out, the CapEx spending will slow, right? I mean, that's a natural thing. So the estimates on the left-hand side are that, by the end of this year, the growth rate will slow back into the 20s and even drop down into the single digit tens by next year. Well, wait a minute. I thought GDP was all going to be driven by this endless money glitch of CapEx spending. Now, the chart I didn't remember to put in here that I meant to is the really interesting thing is they announce these data centers, but only about 10% of what's been announced is actually under construction. So that's a weird dynamic. So there's big announcements and there's big estimated spending, but the amount that's actually under construction, because permits are hard and construction labor is tight. Bottom line is, you can see the green line on the right-hand side, is every time something gets canceled or delayed or you're not going to spend, the GDP estimates fall. And so everyone thought we were going to, remember when Secretary Besant said we were going to grow our way out of our debt problem because debt just hit the new level, the highest level since World War II. Over 100% of GDP. He said we're going to grow our way out 5%. No, we're not. We're going to be sub 2%, it looks like. So we'll see. The real issue, though, is this is a deflationary technology. The hyperscalers want you to believe, and it's really not the hyperscalers, really OpenAI and Anthropic, want you to believe that they have infinite pricing power and they can just keep increasing the price of their LLMs. Well, the left-hand side says the data isn't backing that up. In fact, the price decline of the LLMs is the most rapid decline in tech history, like way worse than personal computers. Now, you could argue, well, I'm getting more. Yeah, maybe, probably, but it doesn't matter. If I'm paying less, there's less revenue to go around. One of the big reasons is the Chinese innovation. So I pride myself on the fact that I have not spent $1 on LLMs. I use the Chinese models. They're free. And Kimi, the one I use, is now the highest rated model, beats, OpenAI and Anthropic benchmarks. And if you look on OpenRouter, which actually just got bought for $10 billion, which bodes well for our Venice investment, almost 60% of tokens are now coming from Chinese models. Well, if Anthropic and OpenAI aren't selling as many models, how is it possible that, the CFO of OpenAI said their ARR grew faster in July than all of second quarter? I think she's torturing the words a little bit, would be my guess. Because the math, again, isn't mathing. So hyperscaler spending had to go somewhere. So I'm not saying that the hyperscalers didn't spend $600 billion. They did. $600 billion is a lot. Well, where did it go? It actually went to memory companies. It went to connector companies. It went to other companies, but it was an expense of the hyperscalers, not a revenue, an expense. it was revenue for these other companies. And these other companies, look, NVIDIA sold a lot of GPUs, but maybe it was already in the price. So the black line is NVIDIA. NVIDIA has really been dead money for the past year. This company, Astera Labs, okay, it went up a lot and now it's down a lot. And even though it dropped 50%, it's still up 100% in the past year. Credo, which makes the little connectors, again, went up a lot. The problem is, and we've talked about this on many calls in the past, there are no examples, literally none, of charts that look like the left-hand side of the Eiffel Tower that then don't look like the right-hand side of the Eiffel Tower. You don't get charts that go straight up vertically and then flatline or go up more. They eventually peak. You don't know when, but they eventually peak and then they go the other way. Memory stocks, look, it was an unimaginable year. SanDisk went up 53 times in 12 months. 53 times. It's amazing. I mean, that is amazing. And a lot of things, went into that, pricing power and growth. But now it's down 50+%. Okay, now you're still up 23 times, not 23%, 23 times. SK Hynix, has dropped 50%. You're still up about 6 times or 5 times. Micron, same thing. The problem is, you can see the little red line on the right-hand side at the very, very bottom. SK Hynix, this is their US listing. It went public literally at the top in the US, and it's down almost 50% since its listing because you weren't buying the Korean company, you were buying the US listed company. So the AI melt-up is a global phenomenon. So Taiwan, Japan, Korea, all soared until June. So Korea is the blue, and it was spectacular. And we'll dive into Korea here in a second. Taiwan in green was pretty great, and Japan in red, and then NASDAQ in pink and the S&P in black looked piker by comparison. No, the United States, biggest market in the world, Japan, number 2. Taiwan went from number 10 to number 3. This is a country with like 24 million people. It's not a very big place. And it has a bigger stock market now than the United Kingdom and Canada, bigger than China, bigger than France, bigger than Switzerland, bigger than Germany. And Korea went from, sub 10 to get all the way to number 6. So this is a big change in the global pecking order and global valuations. Now, Taiwan is really dominated by a single stock, TSMC, perhaps arguably the most important company in the world. Korea really dominated by 2 companies, SK Hynix and Samsung. Now, Taiwan, yes, it doubled in the past year, and it was pretty amazing, but it's been a tough month. In fact, the worst month in Taiwan's history. And you can see, a lot of red. The Japan AI darlings, there were 5 of them, led by this company, Kioxia. And as I said, there are no examples of Eiffel Tower patterns maybe it's the Burj Khalifa, we got to rename it. But it went up a lot. Now it's down a lot. Now it's still up, but my guess is it will continue to come down. And the rest of the companies have almost retraced their entire move. Korea was, past tense, the hottest market on the planet. And it was, on the far left-hand side, a parabolic, it was almost looping back on itself, like almost going back in time. It was so parabolic. And we know, again, there are no examples of markets that look like the chart on the in the white, the bubble chart, that don't then have a drop all the way back down. And, the estimates are this thing could go down 90%. Even the president, it's in small type at the bottom, but even the president of Korea in mid-June said this market has lost its mind and was begging people not to, borrow against their house or their kids' college fund to buy stocks on 4 times leverage. But it didn't work. So Kospi now has gone down 50+%. It had its worst month in its history, down 33% in July alone. And retail frenzy turned to panic. Has the highest volatility in the world. It's never been crazier to be an investor in Korea. Korean equity market, 60% in these 2 companies, SK Hynix and Samsung. The real problem is it was all with borrowed money. Everybody levered up. And so 50% of the people who own Samsung are underwater. 70% of the people who own SK Hynix are underwater. And they got margin called. 62,000 people got margin called and were wiped out. I can't remember the exact, I should get the number. But look, as Korean retail borrowed and stole to buy $60 billion of stocks, the rest of the world sold to you. And Korean investors unfortunately lost 56 trillion won on these levered products. Now the leverage is unwinding, the red box in the middle. But you see, it's making the proverbial Burj Khalifa pattern. So investors, maybe rightly, I don't think so, but maybe rightly, believe that this memory super cycle is different than last time. Like we've seen this before. In 2000, we had a memory cycle. Micron went up a lot. A bunch of other chip companies went up a lot. And everybody thought the memory companies would go to the moon. And then we went from RAM to DRAM. And suddenly there was plenty of memory and the memory stocks all collapsed down 90+%. Now what they're saying is, well, DRAM's here to stay and HBM, it's in short supply. And so Samsung and SK Hynix and Micron are going to be profitable forever. And the Kospi's PE is only 4. So this is a value stock. When you say this time is different, it's always dangerous. I think it's super dangerous this time. These are commodities. And the cure for high prices is high prices. What will happen is more supply will come online. We'll talk about that in a second. The second thing that will happen, someone will innovate a way that we don't need as much high bandwidth memory. That's the way it works. It's just like the reason DeepSeek exists is because they couldn't get Blackwell chips. So, all right, looking more macro for a second. We've talked about the surprises, and one of the surprises this year would be that, the new Fed chair plunges us into recession by doing something silly with rates. And, recession odds, they were rising. Trump did the taco and said we were going to have peace. Now that hasn't worked out so well. But, no recession yet. March CPI came in hot. People started talking about stagflation. Then June CPI came in cooler. Now, the funny thing is June CPI and March CPI were the same, 3.3. But suddenly 3.3 was cool because we were expecting 3.8 when 3.3 was hot when we were expecting less. So go figure. We've been above the target of 2 for 64 months. I guess you can't call it a target if you can't get there in 5 years. In theory, the U.S. economy is less vulnerable to oil shocks. Consumers are less sure. Oil price hike has basically wiped out all of the tax refunds, which is going to be a big source of liquidity. Fed watchers, everyone was expecting rate cuts this year. The Donald said, went back to The Apprentice, you're fired, to J-Powell. You won't cut rates, I'll get someone who will. Now, the new guy, Kevin Warsh, basically wouldn't commit to lowering rates. In fact, as of yesterday, when he had his first meeting, there was a 25% chance that he was going to raise rates. In fact, the guy perpetuating that rumor was this guy, Ken Griffin, which we'll talk about why he was doing that in a second. Now the markets are pricing in a 75% chance of Warsh hiking rates in September based on his commentary. So that's a fur piece from where we were before. So if I can't shoot him, let's have some fun. Surprise would be that long rates reach Mach 10. U.S. money supply growth is accelerating. QE is back. Treasury yields, I'm sorry, they have lost control. Everybody needs these rates to be low. Scott Bessent needs these rates to be low. We have to refinance massive amounts of government debt. Our budget deficit is already astronomical at close to $2 trillion. We cannot afford higher rates. So Warsh promised us he would, whip rates into shape, and the market said hell to the no. So we're not at Mach 10, but we're on the edge of the envelope. Surging borrowing costs are a global problem. We now have the highest rates since the global financial crisis, and it's everywhere. Japan is in the worst shape. The US, Germany, UK, everybody is going to have to refinance debt at higher levels. Private credit, was it going to be this year's or this cycle's subprime? The banks were trying to close the door and not let people out. The shadow banks, they were in free fall. Now, we had the peace deal and they started to rally a little bit, but now they're falling again. I think there's more smoke than fire. I think there's more fire than smoke here. Now, so far, year to date, private credit and high yield have not been the canary in the coal mine yet. They haven't collapsed, but they certainly haven't gone up. So despite your best efforts, you refuse to die. The bear market will be back in 2026 was the surprise. Now, the Ministry of Truth, we talked last time about the Ministry of Truth, basically said war is peace. So markets party. So markets were partying. War is peace. Bulls came back. Where have I seen this movie before? It was kind of like 2000 and the dot-com bubble. Were we going to have a repeat of that? We were on the verge of the rollover, which would have set it right to be about the middle of June. Kind of what happened. NASDAQ parabolic moves going back in time. Only in 2000 did we do that. Schiller PE, margins. Everything was looking pretty ugly. Bank of America, interestingly, issued the chart on the left saying this was 2000 all over again, and it's time to sell. They literally told clients to take profits on 6-9, and they almost nailed it like to the day. Now, I'm not saying that we're necessarily going all the way down, but it's interesting. And triple Qs rolled over harder than the SPX. On the right-hand side, this thing called DRAM. This is the memory ETF. It actually surpassed the Bitcoin ETF as the fastest growing ETF in history. Got to $9 billion in assets and is now down close to 50%. So it's ugly. When did most people buy it? Not at the bottom, but at the top. We'll see how that plays out. What do you mean it doesn't look good? Everybody thinks everything is great, especially AI. Now, we talked about what was going on was there seemed to be this insatiable demand for memory, and that drove shortages and led to higher prices. Okay, the memory wall. Memory companies, Micron, SK Hynix, Samsung, they control the market. It's a, triopoly. And basically they had unlimited pricing power. So their stocks were going straight up. It was really a historic rally, one for the ages. And when you solve for bottlenecks, you can make a lot of money. So things like, memory, things like photonics, all of these things. The question we asked was, is the future already priced in? NVIDIA revenue growth was fading. Does the price reflect that growth? So updating the price, it's still dead money for most of the last year. We've seen this movie before. Intel chips were going to change the world. Back in 2000, Andy Grove was Time Man of the Year. And then 26 years later, we finally got back to the all-time high. Even Intel was looking good last time we talked, but hit a little air pocket on June 9th and has been going down ever since. So much for the government's investment. People are perplexed that Tesla was flat for the past year. We said maybe it's a little overvalued, and it's been straight down since we talked about it. Their revenues were flat. Their earnings were flat. Their free cash flow was flat. It's all bad. Palantir made Tesla look like a value stock. Palantir price trend not friendly. Palantir rolled over, but hey, SpaceX was going to be worse. So Palantir was good. Well, SpaceX was set to be the largest IPO in history. It was. And who bought it? Everyone retail. They set a new record, all-time record, and it did go up for 2 weeks. And now it's pretty much gone down every day and has actually underperformed the worst of the IPOs, not just the average IPO. It's actually outperformed or underperformed the worst IPOs. So it's in like the 95th percentile. All right. So this is the story of the day. So Leopold was the golden boy. So this 25-year-old was a researcher at Anthropic, was dating Dario's personal assistant, decided to leave and start a hedge fund, got some Anthropic private shares. He bought a bunch of AI-related stocks, particularly some of the memory companies. And, what was couple $100 million, went up a lot. He raised a bunch more money. It went up a lot. So at his peak, it was reported this morning that his NAV was 45 billion. Now that wasn't exactly how much money he had. That was the money plus leverage. Whether he had 20 billion or 25 billion or whatever, but like the meme, and it's gone. So Ken Griffin bought it all yesterday. So basically this guy was forced out of business. So now he owns private shares in Anthropic. He said he was going to try to raise more money. I don't know who would give this kid money. And predictably, the stocks that Ken bought yesterday are up huge today. So big short squeeze today. Now, part of the problem here is I always ask this question: why would anyone borrow stock from Ken Griffin to short? People do it all the time. I don't understand, because then he's just going to squeeze you. And that's exactly what he did. And some would argue that he's the guy that spread the rumor that Warsh was going to raise rates yesterday because he wanted to exacerbate this problem and buy the whole portfolio, which he did. Whether that's true, whether it's not true, there's probably a shred of truth to it. There's probably a lot of truth to it, actually. But Leopold got liquidated and Ken got richer. All right. You two really are cowboys. Oil, quickly. Trump, on again, off again, on again, off again, on again, off again. Oil prices were higher because we're at war. The problem was the Strait of Hormuz was closed. Both sides were still attacking. Margin of safety was gone. The SPR has been drained to a level we had not ever seen. The current oil shock was more like the 70s than the 2000s. It actually took multiple years and was pretty ugly for stocks back then. Oil prices were drifting lower as all the headlines were about AI. So what? Trump threatens to blow people up. So, oil goes up 7% and oil prices, you can see on the far right, had a little move up. I don't really understand why the guy keeps saying he's going to bomb people, because he needs oil prices to be lower before midterms or they're going to get massacred. But, we'll see. Oil service stocks had been en fuego, literally, but prices have faded along with oil. And you guys know one of our favorite areas for probably the last 3.5, 4 years has been MLPs. You get about an 8-9% yield, and now you got another 20+% year to date in capital appreciation. So you're making close to 30. MLPs, they don't care about the price of oil. They just need to move hydrocarbons through pipelines in the US, and it's pretty good business. Ego's writing checks your body can't cash. The dollar could it become Top Gun again? The dollar's role had been eroding, really, and was starting to go down a lot as people were buying things like gold and the yen and even the renminbi. Everyone jumped on the debasement trade. The dollar had broken down. Middle East war usually is good for the dollar, but it was actually fading because now we're going to have peace. Despite rapidly rising rates, King dollar has lost the crown. It is basically flatlined, and the chart on the left is actually pretty scary. So if interest rates are rising, that should attract capital to your currency. Interest rates in the US have risen a lot, particularly on the long end, up to 5+%. And yet we've gone exactly the opposite way on DXY. So what that basically says is people have lost confidence in King dollar. Anyway, so she's lost that love and feeling. Europe, the surprise this year would be that European markets are global laggards. Interesting thing, the last thing Europe needed was a rising euro. Ms. Lagarde said, all right, fine, I won't raise rates anymore. That worked. The euro has been weakening. That's good for Europe. European equities shot down by the war. The Ministry of Truth said, party on. Peripheral Europe fell harder, bounced higher. And who would have thunk that Greece and Italy and Spain would be the best performing markets? And look, despite very, very little AI related companies, European stocks are leading the pack, and it's really because of financials. European financials have just been completely in fuego, particularly like the Greek banks and the Spanish banks. The reality is Europe has one meaningful AI company, ASML. They make the machines that make the chips, and they are a monopoly. They're not a duopoly or a triopoly. They are a monopoly. Well, until 3 days ago. 3 days ago, this company, CXMT in China, came up with a new way to make chips without using ASML machines. This is a really, really, really big deal. I mean, now, I don't want to over-exaggerate it, but I actually can't not over-exaggerate it because it's an amazing phenomenon. I mean, despite blockades and despite restrictions and despite sanctions, Chinese scientists just kept making stuff. And now they have invented a technology that likely will redefine the future of how we make chips going forward, particularly on the memory side. And so the memory shortage that we thought we might be over. So this could be really bad for the memory companies. Goodness gracious, great balls of fire. Japan turns into a great ball of fire. And look, Ueda-san wanted a stronger yen. And peace talks basically derailed that. And the yen started to weaken again. Japanese stocks don't like high yen, but they did like peace. Now, Japanese stocks were some of the best performers in 26, left-hand side, but then they started to fall along with AI, primarily because some of the AI darlings in the Japanese market. Well, today, Bank of Japan intervened again. The yen had gotten to 164. And when the Bank of Japan intervenes, that's usually not a good thing for global markets because the Japanese yen carry trade unwinds. Now, we'll see what happens here. I mean, it was counterbalanced by the fact that Microsoft reported good earnings. And there was a big short squeeze and Ken Griffin squeezed out Leopold. So it all happened in the same day. Maybe coincidence, maybe not. I don't know. But it's complicated. So you're still dangerous. You can be my wingman anytime. The surprise would be the China roars. Chinese equities hit by the conflict, bounced on peace deal. China tech were punished and they weren't coming back. Really, Chinese stocks have been counter-cyclical all year. While everybody else was going down, I'm sorry, everyone else was going up, they were going down. Now, since June, when everybody else is going down, Chinese stocks are going up. It's kind of interesting. Total countercyclical. China's CXMT, I mean, this was the biggest blockbuster IPO, went 5x on day one, went to $500 billion market cap briefly, was the largest listed company in China for a few minutes. That's a big deal, right? And will this company really kind of rewire the global supply chain for chips? I actually think it will. And people say, oh, no, people won't use Chinese chips, just like they won't use Chinese models, except 60% are. They'll use them, particularly for memory, not for maybe for processing, but definitely for memory. All right, Bitcoin, in case you're wondering who the best is, resume the inexorable rise, we think, later in the year. Look, Bitcoin died again, up to 475 obituaries. If you had bought just $10 every time it was declared dead, you'd have $62 million, which is pretty crazy when you think about it. Everyone's focused on this Benner chart saying that this was going to be the last good year, 2026, and then we were going to have a bear market for 3 years. And it was really just follow the money. There was this massive liquidity wave, tax refunds. Well, those got eliminated. Now you got corporate dollar repatriation. Well, that hasn't played out the way we thought because the dollar hasn't been very strong. You got bonus depreciation. That is definitely happening with all the AI stuff. And Satya talked about that today. That was 20% of US GDP. Okay, there should be a tailwind for equities and for risk assets. There are some, including ourselves, who still believe that there's a 4-year cycle. We're in crypto winter. The 311 cycle, it's really not 4 years, it's 3 years, 11 months, because it has to do with the halving. And we thought maybe there was a double bottom in the spring. It looks like a pretty clear head and shoulders pattern. Whether the real bottom is in or whether the bottom doesn't happen till October, no one will know until we get to October, but I think we're pretty close. Crypto more broadly continues rapid growth. RWA is a big deal. He's going vertical, so am I. Surprise would be that after an unbelievable year in 25, precious metals take the pause that refreshes. Whew, we didn't know how bad it would be. I mean, gold has in a word, stunk this year. Silver's been worse. And the gold miners have sold off because they have nothing to do with AI. So join us on Around the World podcast. You can pick up, if you missed the last one, or if you want to hear this one, we'll post it. Hedged with a capital D. Corey and I periodically talk about that. And then digital currents we do every week. We record an episode today. So lots to listen to there. And with that, I thought I saw some questions. All right. Do you think they're going to raise interest rates during the next meeting? I don't think so. I mean, that's my opinion. It's so funny. When I did my media training the first time, guy asked me the question and I started to answer. He said, what are you doing? I said, I don't know. I'm answering the questions. You never answer the question. You deflect and redirect and talk about something you want to talk about. I said, look, I'm a dutiful firstborn. I'll always answer your question. So he asked me the question. My answer is not worth that much, but I actually don't think they're going to raise. I don't think the economy can support it. I think if you look under the surface, kind of beyond the top 1%, it's ugly out there. I mean, sure, rich people are vacationing in Europe and buying fancy cars and going to expensive restaurants. That's all great. Stock markets were, before the last month, at all-time highs. Real estate prices were still high. So the inequality gap was big. I mean, the top 0.1%, this is a crazy stat. The top 0.1% of people own 50% of the stocks. It's a crazy stat. So, but under the surface, I just don't think it's that strong. And I think raising interest rates would impact that group a lot more than the people at the top, because the people at the top don't really need to borrow money on their credit cards. Um, do you think the U.S. stock market will face a readjustment? Look, I think we're in a readjustment. We are in a correction. The Nasdaq entered a technical correction down 10%. The S&P wasn't 10%. The memory stocks and some of the big ones are down 30, 40, 50%. So we're in a correction. Now, whether it turns into the full-blown 1929 crash, look, it's not lost on me that it took, Andrew Ross Sorkin 8 years to write his book 1929. And then he releases it this year, in the year that the Benner cycle predicts that we're going to have a crash. Now, whether it's going to be in September or October, when everybody comes back from vacation, I don't know. I can make a case for that, but I could also make a case that you know liquidity is rampant, that China stimulates because they've got some problems in their real estate markets. The stock market was down, and that global liquidity will find its way around the world. I am concerned about the linear extrapolation, and that was kind of the title of the presentation, right? Is AI rewiring global GDP? If everybody thinks the only thing we have to do in this world is build data centers because everybody's just going to spend their whole life talking to chatbots, yeah, fine. Then we'll never have another market correction. But I actually don't think that's the case. And I don't think these models are going to keep going up in price. And I think people are going to keep using the free stuff because it's nearly as good. And I don't think LLMs are the only use case for AI. And I don't think, we're not going to see innovation around, something to replace HBM. I don't think you need to use more HBM to use more GPUs. I think we'll create TPUs or VPUs or something else. In fact, the big assignment. So we have summer interns like anybody, and the project have been given all the summer interns is, all right, use the models and find where's the biggest innovation around processors. We've seen what TPUs, Google Gemini was trained on TPUs, not GPUs. So Jensen's all pissed off about that. Microsoft has actually got a chip. Amazon's actually got a chip. I don't think either one are really that awesome, but they're not bad. So I think there's going to be innovation. And I actually think somebody's going to invent new type of RAM. And it'll be PRAM or SRAM or some other RAM. Maybe it's going to be this big Chinese company. Who knows? But I think innovation will continue apace, and I worry that we're too overly focused on a small number of companies that make up too big a percentage of equities, and they probably do need an adjustment. Thoughts about commodities? Oil should rise, but politicians need oil to be lower. So my guess is you'll see more of what happened yesterday. So yesterday, quietly, the Middle East, I don't remember, Saudi or somebody announced a voluntary OPEC change. And usually when that happens, oil prices move pretty dramatically, but they didn't. So Trump had to resort to saying, he was going to bomb somebody. And of course, oil prices went up instead of down. I don't understand. I mean, there is a perfect inverse relationship between oil prices and presidential popularity, hence, political party affiliation popularity. So if the Republicans want to have any hope in the midterms, oil prices and gasoline prices need to go down, which would mean he'd need the Saudis to start pumping more oil, or the Russians to pump more oil, or somebody to do something. But I My guess is between now and November, oil prices go down, not up, and there will be a big peace deal announced sometime in the next couple weeks. But we'll see. As far as other commodities go, I think you've seen massive de-escalation, like cocoa prices and coffee prices and orange juice prices and the ags. Gold is down a lot. I think we've seen that, and it's frustrating for the commodity bulls. You know, some of my favorite guys are the commodity long-term bulls. You know, the guys who write the In Gold We Trust report, and people like Tavi Costa and others. And you know, we've been in this situation for now run up on 6 years where commodities relative to financial assets are at new all-time lows, and they just keep getting lower. And it doesn't really make any sense given how money supply has grown in the QE era. So we should, in theory, be getting higher commodity prices. And in some places we do have higher prices, right? We have quote unquote inflation. I'll call it currency devaluation rather than inflation. But um, it has been frustrating for commodity bulls, and I think that frustration is going to continue for a while. So, what will the off ramp be for Donald? Oh, how much time before? Look, I don't get it, right? You know, short of actually wanting like global turmoil and distress. So maybe you can be perceived as some big, you know, knight in shining armor. But the Hormuz thing, while what oil is a piece of it, you know, China figured out how to get around it, you know, because they buy the Iranian oil and Iran lets the ships go through. Um, so we didn't punish them the way we thought we were going to. But the real problem, and then we produce enough oil here locally that we can, you know, use our own oil. So the really people who are suffering more than anybody are people in Europe. And we've said over and over, we don't care about them. But the strait is really more important for a bunch of stuff like hydrogen gas, nitrogen fertilizer. We are on the verge, and again, it takes time for the real problem to emerge. We're on the verge of a really serious food problem because of a lack of nitrogen fertilizer. And you can use some other things in the short run, but if you can't get, you know, the stuff through the strait, you can't make enough fertilizer to grow enough crops, and corn will go down and wheat will, or the yields will go down and the prices will go way up. So back to Neil's question about commodities, I might actually start getting long the ags here. Um, the other thing is hydrogen gas is a big input for semiconductor fab production. And so, you know, TSMC's got to be getting a little bit nervous. And I would think they'd make the call and say, you know, Donald, we need our helium, or else you don't get your microchips. Um, so it's tenuous, and I would have thought by now the strait would be reopened, but in fact it just reclosed. And so we're back to kind of March, April levels of traffic going through the strait. Um, so I don't know. I've been surprised, and I don't really understand. Um, all right. Well, that looks like all the questions. You guys have been great to hang out with me. Enjoy the rest of your summer, and we'll probably see you back after Labor Day, and we'll see if the fall turns out to be as tumultuous as Andrew Ross would have us believe. All right. Have a good August.